This one's pretty relevant. This one's out of NYSE America, which is typically this one's a very, very low market share exchange. This is NYSE AMER 2022-44. This one's filed immediately effective, and it is a proposed change to permit the exchange to declare a regulatory halt. So they're revving up for something here, and if they're going to be offloading volatility to the NYSE AMER, that's crazy, because let me show you real quick. They get no market share like whatsoever. So the fact that they're filing immediately to halt is kind of interesting. Let's take a look at just how little they have. NYSE AMER, where is it? Right here. We're talking, let's go ahead and check all the boxes real quick so I can show you. So when you compare everything together, the NYSE AMER gets 0.48% of the total overall market share. So, yeah, now they're filing for trading halts. The timing. The exchange proposes to permit the exchange to declare a regulatory halt in a security that has not been listed on a national securities exchange immediately prior to the initial pricing based on the rules of its affiliate, the New York Stock Exchange. Oh boy. More specifically, the exchange proposes to add a new subsection E to Rule 7.18E, which is trading halts, that would, except for a non-substantive conforming change, be identical to subsection D of NYSE Rule 123D. So obviously you'd have to look into that and see what this rule is, but it pertains to halts and trading. Oh yeah, they're actually going to go into this a little bit. So Rule 7.18E that was referenced right here, they're saying identical to Rule 123D. It governs halts and trading on the Pillar trading platform. I don't know if I've covered the Pillar and the Ox trading platforms before on the channel, so if you just search for it, you'll most likely find it. And basically, this rule also governs how trades and orders are processed during halts, suspensions, or pauses. Okay, it was adopted in connection with the exchange's transition from a floor-based market to a fully automated market. This is a more cause and effect from the switchover from paper to digital. At the time, halts were governed by Rule 123D, which was equities, openings, and halts in trading, which was in turn based on the NYSE Rule 123D. In 2017, Rule 123D, equities was designated as an inapplicable to trading on Pillar and deleted in its entirety. So in 2017, they got rid of Rule 123D altogether, and then the NYSE later adopted its version of the rule governing halts on the Pillar trading platform in 2015. Okay, what are you changing on the filing though? That's what we care about. So they're proposing to amend this rule, obviously, to adopt a regulatory halt condition for initial exchange listings based on the NYSE Rule 123D. So this new rule would be titled Initial Listing and Regulatory Halt. The proposed rule would provide that the exchange may declare a regulatory halt in a security that is the subject of an initial pricing on the exchange of a security that has not been listed on a national securities exchange immediately prior to the initial pricing. What the hell does that mean? And the regulatory halt will be terminated when the security opens. What does this mean? This rule is identical to NYSE Rule 123D, Section D, except for the removal of the reference to the designated market maker, opening the security, since NYSE American DMMs are not responsible for opening or closing individual securities on the exchange. Okay. Oh, okay, so they're saying if the security has not been listed on a national securities exchange immediately prior to the initial pricing, then it has the authority to declare a regulatory halt. So I'm thinking that means, yeah, immediately prior to the initial pricing, the exchange believes that permitting the exchange to declare a regulatory halt in such securities before trading on the exchange would, here's the reason, don't worry, it would just promote fair and orderly markets, and in the case of securities where the initial listing is not a transfer from another national securities exchange, avoid potential price disparities or anomalies that may occur during any trading before the first transaction on the primary listing exchange. There you go. That's they like to tell you, just in a lot of words. The exchange therefore believes that having the proposed authority to declare a regulatory halt is consistent with the protection of investors to the public interest and would promote fair and orderly markets by helping to protect against volatility in pricing before the initial transaction on the primary listing exchange. Brace your tits for volatility. I'm telling you, I've been telling you all year. Everyone thinks I'm wrong, but it's coming. It's coming. And you don't need more than a 1-minute video to see this.